Hello, welcome back to my network. What a way to end the week with Alasdair Macleod, a friend of the show who's been on just before the end of the year. Alasdair, at the end of the year, we were talking about some of the things you were looking out for in 2025. Three of those things were budget deficits, interest rates, and US 10-year treasuries. Why don't we just quickly have a quick chat about the three of them? But before we do, what's your main reaction to this week so far?
Well, not surprised in 2 words. And I'm still watching the budget deficit. I'm still watching, the 10-year US Treasury. What was the third one?
Interest rates was your third.
Interest rates. Yeah, absolutely. Yeah.
You've just done a really interesting post on your Substack I read this morning. I think it was called Donald's Dollar Ducks. And there was a few little bits in there that I really enjoyed and I actually sort of highlighted it to reference back to. Before we go on to, actually, before we actually go on to the budget deficits and because I've got a few ideas about what's going on there, and I've got a few ideas with the Treasury and other aspects. But let's talk about gold and silver very quickly. You mentioned on that comics dealers, and this is about the disparity between the silver price and the gold price. And you say comics dealers have a better understanding of industrial demand factors than monetary. What did you mean by that?
What I mean by that is that the macroeconomic community, which, investment managers and the whole system are all part of, doesn't actually understand the difference between money and credit. The closer they get to it, perhaps is, well, gold is rising in times of trouble or something, but they don't really understand why. Um, the reason that gold is rising, basically, I think, is because there's a squeeze on the market. It's a squeeze on the market because there is just not enough bullion, if you like, to support the huge, great mountain of derivatives, and that's beginning to topple over. Um, I think when it comes to silver, of course, we all look at silver as not as a monetary asset, but as an industrial asset. I mean, everybody's been talking about the supply deficit that's over the last 4 or 5 years or however long, and surely that's got to come through because silver's got this quality, that quality, and everybody wants it. So why isn't it going up? We should buy it, and it's sort of thing. But I mean, they're not looking at any monetary use for the currency, and I think as proof of that is the gold silver ratio has fallen from when it was used actually as money, small change under the British. Well, I say small change. It was up to 40 shillings in under our old gold standard. It was legal tender up to 40 shillings, which of course now looking at a sovereign, which was there's the equivalent of two sovereigns, so that's 1,200 quid's worth. So, which is interesting. But I mean, the point is that at that time, the gold silver ratio was in the order of about 15 times whatever, and now we're 100 times, which tells me that there's absolutely nothing in there at all in terms of pricing it as money, if you like. It's got no monetary role as far as the markets are concerned. Now, that's not entirely true as far as we're concerned in a credit crisis, and so I think that moneyness, if you like, is going to begin to shine through at some stage. And in that article which I published today, looking at the markets, the technical situation actually looks very, very good if you look at it. I mean, if you've been holding silver, you may as well have held copper. They've done exactly the same thing, fallen out of bed big time, and you think, oh God, that hurts. But actually, if you look at the chart, it's just come back and it's testing, or it's tested a support area, which looks like holding, like the top end of a 4-year consolidation. And any chartist will tell you, well, this all looks good, it's intact, and it looks like it could be off to the races. So, we'll see. I think silver is very interesting. I mean, when everybody else is so bearish, it's someone once described it as a puke point, which I think is a sort of fair description as far as most investors are concerned. They feel absolutely sick with the performance. That is the time when you buy.
Really, I think really since the beginning of this year, the more and more I'm talking to people about silver, the more attractive it's becoming. And you're right. Obviously, it is now seen as an industrial metal. Obviously, 60%
Mhm.
now, roughly. But we have, and you said it there yourself. You've sort of had a supply deficit for about 5 years now. But there have been periods in the past, I think during the 2000s, where we've had very long sustained periods of supply deficits, and it never really moved the market so much. But now that it is an industrial metal, does that change things? And it sounds like you're saying that there's a kicker coming from the monetary side.
Yeah. Well, the thing we don't really know, and I'm not sure that the Silver Institute knows when it puts together its tables, is the sort of strategic reserves. Now, China, I know, has built quite a strategic reserve, and I think they use it to try and control the market. Um, there is sort of evidence that that is the case. Now, if I'm right, then there comes a point where it's absolutely pointless them throwing cheap silver onto the market to try and keep the price down. They may as well hold on to their reserves. And I think we may well be seeing that point. Now, if that's right, then the moment China is out of the market, I mean, the price, I think, should take off. So it's going to be interesting to watch.
Yeah, interesting. Let's talk about treasury yields, because you were mentioning back in December, one of the main points that you're really looking out for is if they hit around 4.75 to 5%, then essentially we're in trouble. Um, I think they're around 4.5. They've been floating around that, obviously, and some of the rumors are that really this has really happened due to China selling as a blowback from the tariffs. So how much credit would you give to that?
Well, I think I mean, it's quite likely. We can't know for certain. But I think there is a broader question now that you've got Trump in there, and you've got this tariff policies and all the rest of it. From the point of view of foreign investors, foreign holders of dollar assets, treasuries and corporate bonds and also equities, there's not much point in buying any more. So, given that quite a lot of government's funding has depended on foreign demand for bonds, this, I think, creates an immediate headache. And this is why Scott Bessent, I think, turned around and told Trump, look, you're going to bankrupt us if you go on this rate. So, you back off, mate. And I think that's basically the conversation that occurred. So, as far as as far as the future is concerned, I think what we've got to look at is what level of interest rate is going to encourage foreigners to hold on to dollars. Now, effectively, the foreigners will be looking at the dollar, and particularly since it's broken down against all other currencies. I mean, the trade weighted chart looks absolutely frightful. Um, it's broken down. They know this. The reason they've been buying gold is because they've been selling dollars. I mean, so that foreigners are already attuned to this. When I say foreigners, I mean the central banks, the sovereign wealth funds, the really big money which is close to government, which is part of the debate, if you like, in whatever country at the highest levels. They know this has been happening, so they're not going to buy. They're not going to buy unless they get a return, which is commensurate with how they see the purchasing power of the dollar dropping. They're going to need it as compensation. But the problem is that the higher interest rates go, the worse it is for the US government because they're in a debt trap. And the debt trap is even more stark because as a result of President Trump's tariff policies, there is absolutely no doubt that the US economy is going into recession. And I would actually go further and say it will slump. Now, if that happens, then the tax base to cover the constant accumulation of government debt, uh, you know, as is, apart from the additions to it from the budget deficit, is just not going to be there. And so they are in a debt trap. The debt is accelerating faster than the ability to pay it off or to just control it, if you like. Foreigners know this; they're not stupid. And this is actually why gold appears to be rising. It's not so much gold rising, it's the dollar going down. It's foreigners getting rid of dollars. That is the key to understanding what is actually going on. So interest rates and bond yields, I think you can kiss goodbye to lower interest rates in 2025. And as soon as the markets realize this, there's going to be all hell to pay.
Yeah, well, the Fed have almost, I mean, investors especially are anticipating now no cuts from the Fed now that
Yeah.
the wider tariffs have been limited to 10%, aside from China. Um, you're saying there that it's likely to have a recession. Obviously, a lot of people were saying this, especially when there were 50% tariffs on Vietnam and 20% on
Mm.
EU, and now that that's contracted to 10% globally, other than some key industries like steel. Um, do you think there's a less chance now, or do you think it? What's your rationale behind why the US is going into a recession?
Well, basically, all their goods are manufactured abroad, all their decent goods. I mean, what they do in America isn't really all that great quality as far as consumers are concerned. And the idea that he's backing off for 90 days on everybody else other than China doesn't actually change it at all, because the problem is that supply chains use productive capacity in all sorts of places, but virtually every assembled good, and this is virtually every good with any complexity at all, has Chinese components in it. And so, this is. I mean, he would have to suspend the tariffs against China to neutralize that. But no, what's happening is that he raises the tariffs against China, which I think was a huge, huge mistake. Just shows he doesn't understand what he's doing, or at least his administration doesn't understand. Navarro, I think, is particularly dangerous in this. And you know, what we're likely to see, I think, is the whole works being gummed up because we have got supply chains which basically will not function anymore. And with supply chains not functioning, this is going to have a huge impact on U.S. Consumer goods prices. It's bound to. And of course, it doesn't restrict itself to goods, because when the price of goods goes up, you find that, count up to 10, you see the prices of services going up as well. So, in other words, the purchasing power of the dollar is going to go down. So, I come back to the problem that the foreigners have. What compensation are they going to require in order to retain their dollars? Particularly since, with global international trade contracting, they don't have the need to hold dollars anymore. Yeah, I mean, or the quantity of dollars that they hold. They can cut back on that. They should cut back on that, because there's no point in having um, capital in a foreign currency, even if it's a reserve currency, beyond what you really require. And if you require no less, then sell it, get out of it and get back into your own balance sheet currency, uh, which is for you, even though, let's say you're running you're a Turkish corporation, you know, that currency is your risk-free position, because that's what you're accounting in. So I can see a huge, great contraction in global ownership of dollars, and as far as the economy, as far as the U.S. economy is concerned, I mean, this combination of rising prices, which means a falling purchasing power for the dollar, and selling of the dollar. I mean, I'm watching it right now, and it's still sinking. I mean, this is just looking at it. We're 99.34 on the trade weighted. Now, this is the lowest it's been for an awful long time, down another 1.5% today, today being Friday the 11th. So, um, yeah, I mean, this is a disaster. It's the worst possible combination. Some people call it stagflation, but basically it's a good old-fashioned slump, which is being brought about by tariff policies. I mean, I would add that what we see today is very similar to what we had in 1929, when we had the culmination of the Roaring Twenties, which was a credit bubble. Today we have a far larger credit bubble, and then you had the Smoot-Hawley Tariff Act, which raised prices by around about 20%. I mean, tariffs were around about 20%, though the effect was probably a bit more than that. And today, I mean, in those days, if you looked at the US economy, roughly 2 or 3% of GDP was international trade. Today, this is far more serious, and the impact on the US economy is considerably greater, and the impact on the global economy is considerably greater. What we saw in 1929, which basically killed the stock markets, the tune of knocking out around about 90% of value, and something like 9,000 banks went bust or shut in the wake of it. Um, those conditions were benign compared with what we have today.
How much of this really comes down to 'cause, something that you're hearing a lot? I'm hearing a lot in the media at the moment is this plan. He wouldn't have stopped the tariffs if it wasn't for the Treasury yields going up.
Yeah.
Um, so how much has it really been thwarted because of that? Because I think if you look at the overall strategy, if you believe what they're saying in terms of the Trump administration, they've got a 2 trillion gap that they've got to fill.
Yeah.
Um, Trump's talking about what 2 billion per day coming in from tariffs at the moment. That's what he's spending at the moment. So you add that up, that's 730 billion there. He's got the Trump Visa card coming out. I was reading Dominic's Substack the other day. He was saying that best case scenario, maybe you could get 500 billion from that. But that's a one off. And then Doge is meant to scrap around 1 trillion. So you add it all up, best case scenario, 2.23 trillion that you could save. Uh, how like, because from what you're saying, this is going to essentially collapse the economy, increase interest rates, debt's going to increase. So it's almost irrelevant trying to have these goals of trying to save the 2 trillion because the goalposts are moving while you're doing it.
Exactly. I mean, no, you're absolutely right. The drop in revenue, and at the same time the increased welfare commitments basically are going to blow the budget deficit wide open. I mean, from around about 2 trillion ish, I wouldn't be surprised to see this year going out on something closer to 3 trillion. And this, of course, is a further problem because it's got to be funded. And at the moment, they can't really fund out a lot along the yield curve. They're having to fund short term. There's a huge, great dependency on T-bills with maturities of less than 1 year, because nobody will commit themselves into a longer term bond. I mean, apart from pension funds and insurance companies, and that's that's about it. This is not a good situation.
What about if the strategy isn't the tariff revenue? What if the strategy has always been less barriers to trade? This is a tactic to create more free trade agreements. Is that a scenario that you could foresee? Obviously, he's
No,
talking about 25 countries. No, not at
no.
all. No.
First of all, Trump has always said tariffs is the most beautiful word. I mean, he's been going back to the days before income tax was imposed by the federal government on the American people. So we're going before the First World War, when basically the government's income was tariffs and not much else. Um, and he wants to get back to that. He wants to shut down the IRS, and so this is what he said. Um, but I have to say, he hasn't got a clue. I mean, he really hasn't. And we're seeing this come out now. I mean, the idea that people sort of think he's terribly clever and he's got some sort of hidden agenda. If only we could understand what it was. Yeah, well, I can tell you, he hasn't got a clue, and that's what we're seeing. Simple. I mean, this is the man who reckoned that he could close down the Ukraine war in a day. You know, where did that go?
Yeah, yeah. Putin doesn't seem to be his best friend anymore, eh? Um, what about as a result of this, in terms of the blowback that we've seen this week? Does pushing for free trade agreements now become his only option in a sense?
Well, I mean, that would be a complete volte-face. So politically, I can't see this. I think, however, he is now on the run. I mean, I think what we've seen with the Treasury turning around and saying, no, you cannot do this. I mean, basically, he's like a bully, really. Um, and you know what bullies are like. I mean, it's fine when everything goes their way, but the moment it doesn't, they get terribly confused. And I think that's the situation he's going to be increasingly finding himself in. So, I can't see the Americans going back to lower tariffs. And in any event, that's not their history. I mean, every president has imposed more and more tariffs. I mean, even Reagan was trying to get tariffs down, but failed to do it. Biden increased tariffs over Trump's first presidency. Um, it's all protectionism. I mean, that's the natural default position for any politician. So I don't see him coming off this one completely at all. What I can see is a total loss of confidence in amongst the foreign owners of dollars and dollar assets. That I think is whatever he does, he's lost credibility now.
Yeah, I do want to talk to you about the US standing and the reserve status. I want to come on to that in a second. But in terms of staying on the same train of thought, what other options do you think he has now, the position that he's in at the moment? And I guess even looking back, if you look at the devaluation of the dollar, the debt trap that they've been in, this sort of power dynamic between China and the US, and obviously it hasn't really been going in the US's favor, and a lot of it's been their own goals, really. But I guess from the US perspective, they almost have to do something. That's sort of the feeling within the US is if we keep going down the path we were on over the last 20, 30, 40 years, we're going to end up as a they're going to end up essentially in a massive debt trap that they're in and never going to get out of it. And it's only going to get worse. They're going to lose most of their internal industry. So I think there has been a big call in, and you look at the polling in the US. It's what he's doing is actually still quite popular. Um, so I guess what else can they do other than try and protect themselves against what's inevitable?
Yeah, it's a question of what is politically acceptable, what they call the Overton window. um, and I think that window is sort of closing. I think it's closed down a bit under him. I mean, the skill of a statesman, which Trump is not. Let's be clear about that. The skill of a statesman basically is to take the population with him in the correct direction. All Trump has done is he has responded to, if you like, the sort of the middle American ignorance of the rest of the world and so on and so forth. A very very simple approach. I mean, it's fascinating because I've sort of corresponded with a few of these American supporters of Trump, and they, they are completely shut off to reason, completely shut off. And I think when you understand that, you can see that the ability of the Trump administration to uh, turn things around, to actually think, hold on, we've got to go in a different direction, and we've got to take the population with us. I don't think it can be done. I can't see how it can be done. If you had a really good statesman in there who, to use the Irish phrase, I wouldn't start from here, sir. If you had someone, in that position, then there might have been a chance. But I just don't see how it can happen. And as far as the geopolitical situation is concerned, I mean, uh, really, uh, America has been losing out to the Asian hegemons, really for the last 10 years at least. Everything they have done has backfired on them. I mean, for example, the proxy war in the Ukraine against Russia, the proxy war against Russia in Georgia as well. I mean, these were all attempts to try and destabilize Russia, and they've completely failed. You go to Russia now, their missile technology is absolutely fabulous. Their economy, we continually say their economy is absolute rubbish and about to fall apart. No, their economy is better than ours. We listen to this propaganda, but actually the truth of the situation is very, very different from how it's presented to us. And it's the same with America and China. China is now sort of more or less made itself pretty much independent of a dependency on exports to uh, 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 um, the states, and consequently, they're now in a position of strength. And I mean, if I was in Xi's shoes, I don't think I would have responded with 125% tariffs and all the rest of it. Um, what I would do is I would just say, right, okay, you're not getting any rare earths, stiff, Put that in your pipe and smoke it, Mr. Trump. So, I mean, they've got huge power, and not only that, but um, the rest of the world is watching this. And before, I mean, the problem that BRICS had was that people were reluctant to join BRICS for fear of what the Americans would do to them, because you've got American military bases all around the world. I mean, God knows how many of them. And also, they arrange coup d'etats, things like that. So that frightens a politician. What do you do? Well, we'd like to do things with China. I mean, we'd like to go into joint ventures. We'd like the commercial opportunities to develop our country. But we're a little bit worried about going too far in that direction. Now, I think with Trump, and particularly since he's just withdrawing into America, into the American continent, I think it's just opening up a whole bag of worms as far as America is concerned. The rest of the world is going to say goodbye, America. I can see that happening really quite quickly too.
Yeah. Okay. Which all, it again brings me back to this theory of surely he now needs to change course and organise free trade agreements with his allies and stop treating places like Canada as he has been.
You're talking like a sensible economist. Unfortunately, we're talking about politics.
Yeah.
It ain't going to happen.
Okay. Let's talk a little bit about sort of in this scenario that you're painting at the moment, or sort of what we're actually seeing, I guess. At what point does China try to move away from the US as a reserve currency? Because surely the longer this goes on, the more appealing that will be. I'm having conversations with different mining companies that are heavily exposed to China, and you still have to use US dollars even when
Yeah.
trading for equipment and materials and whatnot. Um, I think everyone's getting the sense that surely we're getting closer to that point where China will have to try and find an alternative.
Yeah, I think there are two different problems here. I mean, the first one, international trade, that depends on dollar credit. When you buy goods, whatever, when you transfer goods across borders, then you use dollar credit. Okay, and once you've transported it, the credit is extinguished as far as you're concerned. Someone else has the has the problem. So that I think is one thing, and that is not a huge great problem. It doesn't matter what the value of the dollar is, so long as you don't hold it in the process. You just use it, rather like people sort of think Bitcoin can be used, if you like, to do a transaction. So that's one thing. The other thing is that you've got your own currency, and in a world which fiat currency world where the dollar is the reserve currency, you end up going down with the dollar unless you protect your own currency. And so that I think is probably the most important point as far as China, Russia, India, even, and also a plethora of countries in Africa. Um, so to protect their currencies, they have to come up with something better. And I think the only way they can do that is to go back onto some sort of metallic standard. And I think this is why, uh, um, strategically, central banks have been dumping dollars to buy gold because they know that's the way it's got to go. You've got to secure the value of your own currency. The only way to do that is to have a gold exchange standard. Now, whether they do it correctly or not, I think is too early to tell. My guess is that they won't do it correctly to begin with. They'll probably go and try and sort of do a Bretton Woods thing where they say, well, the yuan is fixed to gold at whatever price. But you plebs can't cash in your yuan for gold at the central bank. So I think that's probably the initial way in which they'll try and stabilize things. But if that's really going to work long term, then they're going to have a proper gold standard, and it's not too difficult to do. But I think we've got into a situation where everyone wants to just hold on to their gold. That's what's got to change because gold has got to be used to secure the value of credit. You can't just hold on to it and say, "Well, I'm out of credit. I don't want credit. I'm holding on to my gold because I don't want credit." You've actually got to use it to stabilize credit. And that, I think, is eventually where China goes. I know that China has accumulated huge quantities of gold. China's been rather like Hotel California as far as gold is concerned. What goes in doesn't come out. Uh, and the people have also bought something like, I don't know, 25, 26,000 tons, if you look at the withdrawals from the Shanghai Gold Exchange. Russia, too, she's accumulated a reasonable amount of gold at the central bank level, and she's got two sovereign wealth funds as well. And I'm informed credibly by credible sources that those sources are got another 10,000 tons approximately of gold. So, Russia can secure its ruble, and the great thing about Russia is that its economy, because it's had the luxury of exporting energy, huge quantities. The levels of private sector taxation and so on are, we can only dream about it. Would you believe 13% flat rate? Yeah. And if you look at what's been happening to wages have been soaring. But what people have done is, obviously, it has had an inflationary effect. But what they've done is they've increased their savings. They've been putting, banks have been saying, we can offer you a deposit rate of 21%, which is fantastic. Your wages have been going up by sort of 30, 40% a year. Inflation at the CPI level has been up about 8, 10%, something like that. And the reason that it hasn't been more than that is because people are saving. This is, if you like, the bones of an economy which can very quickly switch on to a gold standard. Simple.
But one of the main critiques I've heard with gold standards is essentially the level of trust that those using the standard have with each other, and how you do the delivery of gold. How I don't. Is there an easy solution to that?
Yeah, basically, make sure that you say, okay, I'm the issuer of the notes in this country. I have gold. If you want to cash in those notes, or if you're a bank and you've got reserves with us, reserves being the sort of technical term, then we will swap it for gold on demand. And you just got to make sure that you manage your gold reserves. How? Through interest rates. The job of interest rates is to manage your gold reserve, not to meddle in the economy. Forget the economy, it's to manage the gold reserves. Then it's no problem. It really is not. And we've found this through experience, particularly following the 1844 Bank Charter Act.
But in terms of, can some of these nations like China, Brazil, Saudi Arabia, Russia, can they trust each other down the line not to stitch each other up?
Well, it's not a problem because let's say China goes on to a gold standard, okay, and a proper gold standard. And Saudi Arabia, let's say, once it's got a surplus of yuan notes, and it just decides to cash them in for gold. Yeah, sure, it can do that. But whether it does or not will depend on the interest rate that the issuer of the yuan, in other words, a separate division of the People's Bank of China, is actually applying, if you like, to the economy. So, it's that creates the arbitrage. We saw this arbitrage actually in a slightly different context with premiums on COMEX futures sucking gold out of the rest of the world. And it's sort of the numbers you hear about the amount of gold that was sucked out, are absolutely mind-boggling. But if you just look at what's happened on the on COMEX warehouse stocks, something like 500 tons, 600 tons, basically moved in pretty quickly. That's the way you do it. It doesn't matter how bust you are, actually, within reason. But if you charge enough, if you pay enough interest on a credible gold substitute, this is the key thing, on a credible gold substitute, your currency, then you don't have a problem.
Right. What do you think? How much gold do you think China has now? Because it's been widely rumored, and I think everyone I've spoken to agrees that they're not disclosing their full gold reserve. I mean, they're the largest producer of gold in terms of mining around the world, and none of that leaves the country
Yeah.
every year. Um, how much larger do you think it is than the US, or do you think it is larger? Because obviously, everyone, if you look on paper, the US supposedly has the largest gold reserve, but I think most people think that's probably not true now, right?
Yeah. Well, China's gold reserves, bear in mind that the People's Bank of China was appointed in 1983 by law, by regulations, and I got a copy of the regulations in English. You can get them on the internet to manage the nation's gold and silver supplies. And so everything goes through the People's Bank of China. Now, between 1983 and 2002, when the Shanghai Gold Exchange was set up, again wholly owned and controlled by the People's Bank of China, they accumulated gold. Now, bear in mind that this was a massive bear market in gold, so they could buy gold in the market without appearing to be there, just taking it as it came through agencies, through whatever, whatever. Also, bear in mind that from the 80s into the early 90s, you had huge net capital flows into China as people set up manufacturing operations from abroad. After that, you began to get huge, great trade surpluses. So if you just assume that something like 10% of that between 1983 and 2002 was put into gold, which was a reasonable assumption at the time, then that would equate to roughly 20,000 tons. Since then, as I said earlier, China has been like Hotel California. But the fact that by 2002, the state obviously decided that it had acquired enough gold for its purposes, whatever the basis of the decision, it could then allow its people to accumulate gold because they were banned from owning it until that point. They even advertised to encourage people on television to encourage people to buy gold. It does you good, whatever sort of thing. And they have accumulated a further 27,000 tons, 26, 27,000 tons. Admittedly, that's a gross figure because there would have been some scrap going back into the SGE's vaulting system. As you say, China is a major, major, major miner. So all that has been retained. Also, China has continued to buy from abroad. Um, and this is why we've got a bit of a crisis today, because China basically has sucked out all the liquidity. And of course, as a leading member of, or the ringmaster, if you like, the Shanghai Cooperation Organization, you can understand that the discussion, if you like, the back chat in all the meetings has been how much gold have you got? So they're all doing exactly the same thing, and anyone with any pretensions to join, who's not a full member but maybe an associate or a dialogue partner, which are the two other categories, will be doing exactly the same thing. And then of course you've got BRICS. I mean, look at India as a classic case. India basically it's Keynesian in approach ever since Singh became prime minister, sort of following the Gandhis, the socialist Gandhis, and the Bank of England basically advises the Reserve Bank of India when it comes to appointing the governor. So he's one of our chaps. So you can see that they've been basically following what we do, cloning it. Um, but then they have realized that they need to accumulate gold because they are the most populous nation in Asia. Everybody else in Asia is moving towards gold. They weren't. Their citizens are. I mean, the government was just damn stupid over all this. But they're beginning to realize that they've got to do something about it. And I think they've now got about 800, 900 tons or something. So, even they have moved towards this, understanding of a gold, some sort of gold backing is required. And I think that they, along with China, but particularly India, balked at the idea of introducing a new gold-backed BRICS currency ahead of the Johannesburg summit in, what was it, 2022 or 2023, I think it was. Sorry.
Why do you think China aren't disclosing their full gold reserves?
Why they're not this? Well, because they accumulated their gold secretly. It's quite simple, and they don't want to. I mean, they just don't want to rock the international monetary boat. Uh, it's as simple as that. It's not their style. Their style is let everybody else make the mistakes, and we will just, we will respond to defend our position. That's all.
Okay, so as, again, as always, I love talking to you, but I always get a bit depressed after talking to you about how the world is.
Sorry about that.
It's all right. No, it's eye opening. Okay, so you're not seeing any shift in Trump behavior, just going back to the current theme, everything that we've seen this week. You're not obviously he had to back down on the global tariffs. You're not seeing this as an opportunity for him to an olive branch to everyone else and become friends. You're still seeing this nationalistic approach moving
Well,
forward.
yeah, I think I'd go a bit further than that because he's lost credibility. I think he's lost credibility hugely, and particularly amongst the opposition in America. So they now, now that he's weakened, rather like the bully in the playground. When somebody stands up to him, suddenly this is very, very confusing. This isn't meant to happen. But it also impinges on a bully's credibility, and then everybody starts laughing at him. And I think if I can, without stretching that metaphor too far, I think this is going to be Trump's problem. I think over over the next few years. So the idea that you're going to get something sensible out of America, I think we can sort of rather forget. I'm not quite sure how it'll plan out, but for the moment, we have a credit bubble crisis that's imploding now. I mean, if you have difficulty understanding the extent of the credit bubble, just look at the amount of debt, because debt is the counterpart of credit, and that is just absolutely extraordinary. So this is, this to my mind, coupled with these tariffs, and I think having set the tariff hair running, I don't see the world going back, to sort of nice smooth supply chains. And you got the EU looking at China saying, well, we don't want what they were going to sell to America dumped in the EU. So you can see the interplay of this is just so disruptive and horrid. Um, I really do see that we're going to have, if you like, the end of the fiat currency era. I think I would say it's as serious as that, and we don't end up with the end of a fiat currency era without a lot of bones being broken.
Again, yeah, it's just such a worrying prospect, isn't it, in terms of what that means for everyday people over the next couple of years.
Absolutely.
What I guess the only way to hedge against this is gold. Really, I'm not. If that were to happen, look. Some people think that the tariffs could work and they could whittle down the deficits and you could see a real industrial boom happen again in the US. I know you're not a believer in that, but some are. But failing that happening, and we do see even if it isn't just the end of the fiat system, but we do just carry on seeing the devaluation of currencies. I guess that is sort of where gold comes into play, right? In what scenario would those who are holding the most amount of gold, like the East mainly, in what scenario would they start selling
Yeah.
gold?
Well, you have to understand that there is a difference between money and credit. And as the great John Pierpont Morgan put it back in 1912, gold is money and all else is credit. And that is actually still true today. Gold has been legal money since the difference between money and credit was laid down in the earliest form of Roman law, which was the 12 tables dated from 448 BC. Now, the Romans invented banking, and the Romans also basically were the father of all the European nations who have gone off to colonize the world and spread their common law around the world. The Chinese ended up with exactly the same view on gold as opposed to paper, because they invented paper money. So they came to the same conclusion separately. Now the whole thing is therefore, you've got gold whose purchasing power over long periods of time more or less remains the same. Obviously, individual components rise and fall and all the rest of it. But if you look at Diocletian's edict of maximum prices, you can recognize quite a few prices there which are not too different from prices today in gold. Um, so the key to it, and it's always been this, and this is something that was well understood uh, in Britain back at the time of just after the Napoleonic Wars. You've got to secure the value of credit against money, and that was why we went on to a gold standard, with the sovereign being exchangeable into £1. They had various committees that looked at this, came up with solutions and all the rest of it. They didn't get it wholly right. The banking system, the credit system, if you like, wasn't as efficient as it became. But it got better and better and better, and the result was price stability improved and improved and improved. So, if you look at wholesale prices, a wholesale price index in 1844, at the time of the Bank Charter Act, prices were actually about the same as they were in the early 1900s. And that was due to the gold standard. And that was despite crises such as the overend Guernsey and the first bearing crisis, which in our times would have absolutely undermined the pound completely. This stability is actually so important, and it means that savers don't get robbed, and also it means that bad businesses don't rely on a depreciating currency. That, if you go back to proper money securing the value of credit, because money itself doesn't circulate. That doesn't circulate at all. But as long as it's sorry, I was just looking out. My garden has arrived. as long as 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 long as you can secure the value of credit, which includes currencies, by the way, currencies being the highest form of national credit, as long as you can secure that to gold, then you have a stable system. The problem is that we don't have a stable system. And just look at the sovereign. We've gone from one sovereign, £1, and today we are close to £600 for one sovereign. Gives you an idea of how the currency has been gradually destroyed over the last, since the 1930s, which was the last time we were on a gold standard. This is what's happened. 90 years, we have gone from 1 to 1 to 1 to 590 as I speak. That's what's happened. It's robbery. It robs individuals, and this is something which eventually markets wake up to and stop. And I think we're in that process now.
Okay, if I can, I just one last question, similar to what I did last time you were on. What are you looking out for over the next couple of months, or say throughout the rest of the year, as indicators that we're on this path of fiat collapse?
Budget deficits, interest rates,
Same thing.
and the 10-year yield. What more do you want? I mean, I know what's going to happen to equities. They're going to plummet. They've already started doing that. So, I mean, I'm not. This is not. This is not rocket science. It's actually quite simple. And of course, you've got the psychology of the markets. Everybody's long of this, that, and the other thing, and things like Bitcoin. The new way to really, really, make money. I mean, but that's the people who own Bitcoin are the same cohort who own the Magnificent Seven. Good luck to them.
Let me ask you one last thing, if I may. After the COVID dip, we did see a reallocation of funds into equities, but it was mainly physical, sort of hard assets. So it was mainly sort of mining equities and sort of physical assets that we saw. We had a really nice 6-month, 9-month period. as we see sort of this economic collapse or market collapse within tech stocks and other sectors, do you think there's a possibility that some of that money may be rerouted into sort of more of the physical assets that are listed?
Uh, well, that's difficult to say. Not so much, I think. The problem, if you look at the time of COVID, basically interest rates were suppressed right down. And it also took bond yields way down with them. I mean, the 10-year yielded less than 1%. I'm talking about the US Treasury. And of course, you had negative yields in the Eurozone and also in Japan. Um, Compared with the returns on those 10-year bonds, or indeed going longer if you like, equities were undervalued. And so that's why equities have really performed very, very well since. But the situation is now reversed. Equities are wildly overvalued compared with the yields on the 10-year US Treasury. So that gap has got to close. And I have to say that because I run a chart on this, it is twice as extreme today as it was at the top of the dot-com bubble. So you can see that the potential for a collapse in equities is there in spades. And that's a starting point. Your problem with real assets, I mean, for example, well, commercial real estate, you got a problem there, which has become very obvious, and that is that there's now too much office space. So you've got an overcapacity problem because of the working from home, and unemployment is going to be an increasing thing as well. And on top of that, of course, things like property depend on their value for interest rates because it's all financed by credit one way or the other. So, and the same thing with things like leases. So, aircraft leasing, ship leasing, all these things are going to, the costs are going to rise, which basically means that the value of these assets is likely to decline. And the same, incidentally, with residential property. You would think that if we got a collapsing currency, the best thing to do is get the hell out of the currency and get into property. Well, the experience in Germany in 1923 ended up with, if you had dollars which were readily convertible into gold at 20.67 to the ounce, you could buy property for nothing. Now, I don't know how many grillions of paper marks, notionally a property was worth, but you can see that actually, in terms of ultimate protection, you were far better having something that was tied to gold in terms of value. And the value of property in real terms in a hyperinflation actually collapses. And so much so that you find that the cost of maintaining property becomes higher than the value of the property itself. So this is, so I would put people off thinking, this is the way I protect myself. Now, there is an interesting possibility, I think, in the mining sector, which is which has been under research recently. Most major brokers have cut back on their commodities and mining research simply because there's no interest in it. But of course, that's now changing. So I think that there's a lot of money to be made, a lot of credit, if you like, to be made by playing that sector correctly. And remember, even though we're going to hell in a handcart, China, Russia, Shanghai Cooperation Organization, BRICS, and all the people queuing to join into BRICS. They're rapidly industrializing, and they need these commodities. They need gold, they need copper, they need silver, etc., etc. So that I think is an area which is going to see a lot of portfolio shift into out of formerly fashionable areas.
No, I don't agree with that. It seems the writing is on the wall for that to eventually happen. It's the,
Yeah,
the my only question is why hasn't it happened yet? But I think we are getting there.
it's fashion. It's fashion. I mean, it just shows how stubborn the whole thing is. I mean, here we are in the West. We see gold, vaulting up to new highs. And have we got it? No, we've got none. I mean, the investment management outfit, I worked out that they've got less than I think it was 0.2% of their portfolios are exposed to gold. You know, uh, this is crazy. And if you throw in mines and all the rest of it, I mean, you're lucky if you see 0.3, 0.4%. There's got to be a huge shift in that, away from where people are invested at the moment.
The path we're on now under Trump's new era and what he's doing, obviously the way that you're sort of foreseeing things going doesn't sound well, but is it any worse than what it would have been under Biden or Kamala with continuous QE
Mm.
and the mess they were making? I mean, what's the word? It seems like you can't win no matter what happens.
Well, yeah, I mean, basically, we were on a slippery slope even before Trump was elected second time round, even before he was elected first time round. I think what Trump is doing is he's speeding up the process of the collapse, and it's going to happen anyway.
Does the speeding up the process of the collapse mean the collapse is lessened than if you kicked it down the road any longer?
No, well, it's going to be sooner rather than later, I think.
Yeah.
Yeah,
God. Good. All right. Well, Alistair, I really appreciate your time. We've gone on for quite a while there. So yeah, thank you very, very much.
that's very much my pleasure.